So, what changed? Was it a strategy or was it a psychological change? Was it your risk? What would you say was the most important there?
You need to commit to work. If you really want to success like a trader, you have to put it in a work. Like you have.
Welcome, everyone. This is our second live webinar, and it's called Inside the Mind of a Funded Trader. Today, again, it's not about showing off profits, guys. It's about understanding how a funded trader actually thinks, manages risk, and stays consistent. So, some of you may already recognize our trader we have with us today, who's previously completed some interviews with us for our YouTube series. Today we have Boban Badjic, and he's got over $20,000 in withdrawals. But more importantly, someone who's actually figured out how to stay consistent. And I think, Boban, you've only had two accounts with us in 11 months. You've managed to hold them. Is that correct?
Yeah, I have one account, and the second one was like breached because me and my brother we were trading, but we are trading the same strategy, and there is like some similar entries, so
Okay,
it,
fair
it
enough.
was counted like copy trading. So that account was a breach, and
But
then
this one you've held for the one you have now,
one
you've
year. Yeah.
held for 1 year. That's crazy. So, extra special one for you today, guys, with a ton of value. And guys, I just want to mention as well, if you do stay on the webinar till the end, there will be a special giveaway for 5 users and a gift for every single person. So be sure to stay tuned for that. So let's just go straight into the questions for Boban. Boban, welcome again. For the people who don't know who you are, and haven't seen any of your interviews on YouTube, let's talk a little bit about yourself. Where are you from? How old are you? And how did you get into trading?
Yeah, my name is Boban Badjic, and I'm coming from Serbia. I started trading like 5 years ago when my wife mentioned me that she heard from her colleagues that are doing like trading, and she said like, why don't you try it? So at the moment, I was looking at the charts, and I heard Bitcoin is like rising, going up. And I was like, I'm gonna invest in this, I'm gonna put $20 and see what's gonna happen. So I entered in a trade. It was like around 46,000 or 47,000. And 1 week after, I opened a trade and there's like $150 on my account, like $150. So I was like, okay, we're gonna go on a skiing. And that's how I like started.
Yeah. So, to get to where you are now, I'm sure the users want to know, did you fail challenges before passing and what kept you going?
Yeah, I failed, but like because of my, let's say my patience and my disciplines, even though I'm like, I think about myself that I'm impulsive, like I got really impulsive at sometimes. So my first challenge, I managed to pass the phase one, and then I blow it on the second phase.
Yeah.
So after that, like I blow 5 or 6 more challenges, and then after that, I was like, I'm not ready for this. I have to learn, like I have to
Take a
commit
step
to it.
back.
Yeah.
Yeah.
And then I was like taking step back, and then I was like started learning, and then I found that guy that like I found two good mentorships,
Mhm.
and with one guy, he was like, I'm gonna like take 10 people and just keep committing with them. Like I'm gonna work with them until like you guys become a profitable. So it sounded like I was curious, and then, like it sounded good for me. Like somebody's gonna work with me and maybe he's gonna teach me how I'm supposed to trade and see what's gonna work, what not. So that's when I like started committing to the work and to the strategy
Yeah.
and my patience, and that's how I started.
Was there a moment where you almost quit?
Oh, so there was like a lot of moments where I was like almost quit. Like I wanted to broke my phone, my computer, and everything. Even though there was like one night I was like I like risked more than I should, and
Yeah.
then I lost some like I can't remember how much money was that. Like at the moment it was like big money for me, but like I know I was crying during the night, and then somehow that trade just reversed. I don't know how, but that
Yeah.
trade like reversed during the night, and I was like, okay, I'm out on a break even. But that night I won't forget. Yeah.
That's great. I mean, it is tough, like it's tricky, but there's a lot of benefits in it, I think. So, when you come out the other side, it's super nice, like yourself. So what changed? Was it a strategy or was it a psychological change? Was it your risk? What would you say was the most important there?
You need to commit to work. If you really want to success like a trader, you have to put it in a work. Like you have to learn the strategy properly. You need to be psychologically ready and learn psychology. and also the risk management. When you commit to those three things, like I did, you are gonna 100% become a profitable.
Brilliant stuff. Brilliant stuff. So before we go into the charts now, we're just gonna have a little look about what you do and stuff and how you approach the markets on, given day with your given pair, right? So what markets do you focus on and why, first of all?
I focus on indexes, like Nasdaq is my number one, and I only trade indexes like Nasdaq. That's it. Like
Oh,
that's my only
okay.
pair that I was trading, and that's it.
Do you
Uh,
think it's better? Go on, Dan.
yeah, sorry, I just have a question for you. Yeah,
Yeah.
was that something you kind of initially went in knowing you wanted to trade index, or had you tried FX pairs, currencies, and just realized that wasn't for you?
No, at my beginning, like I think 4 years, I was trading Euro USD and GBP USD. So my focus was on that and only that. And let's say, I would say for myself, I found my profitability and consistency earlier. But
Right.
since FX is a bit slower pairs, it's slower than indexes. So I sometimes I have a trouble to find the proper setup. Maybe one week I have zero setups, and then the next week I have like two or three, or some weeks later is only one setup. And then it took me longer to get to my payouts than now.
Right. So would you say with indexes you kind of prefer setups having like on a daily basis, or is it 2 to 3 times a week? Is that something obviously you look for?
Sometimes like I can find everyday setup. Sometimes like there is no setup for me. Like sometimes like depends on the charts.
Right.
Like for example, February was a really bad month for me. Like there is talk between USA and Iran. Is there going to be a war or not? And then the charts were like super slow indexes. Like I know I had like so many losses on February because charts was sitting in the place.
Right. Interesting. Thank you for that.
Yeah, so Boban, just back to the charts a sec here. Now, you mentioned you focused on a couple of indices, and I've heard a lot of rumors whilst I've interviewed traders. A lot of people say, "Oh, it's best to focus on one." Would you say that that's true, or would you say that it doesn't matter as long as you have something that works for? Because a lot of newcomers, especially when I was trading like 11 pairs or something, and I was getting confused. So what do you think is best to do for a beginner to, find their way?
For a beginner, yeah, focus on the one pair. But like if you can to focus on a more pairs at the moment, like every day. And I know guys that like they can find a setup. They open the higher time frame on the charts and they see, okay, this chart is looking good for me. So I'm gonna trade, let's say, gold, for example. Today
Hmm.
is gold good, and then I'm gonna just trade only gold. I'm not gonna look at the other pairs. But for me personally, I'm like still trying to stick with one pair. That's it because
Oh,
it works
nice.
for me.
Okay, well, I suppose if it's, if it's not broken, don't fix it, innit? So, okay. So, are there any days or times that you do not trade? Like, since you've done your journaling and backtesting, which you're really meticulous on, are there any days you're like, well, I'm losing like 60% of the time on Friday, so I'm not trading Friday? Or is it just like, I'm still going to trade it and is it like that?
No, I don't compare that to days, but like I'm looking charts on a daily basis, and then I'm like, if I mark my zones and I'm like sticking to point of interest. If price comes to my point of interest, I set an alarm. If it hits, I'm then looking at the chart and then like, okay, let's see if I have a setup on that day. And if price does not hit that point of interest, I'm not looking at that. That's it. Like
Perfect.
it's simple
Okay,
as
yeah.
that.
So, if you wouldn't mind, just open up your charts and we'll have a look at step by step at what you do and what you look for, just to give the
Yep,
viewers some
sure.
insight.
Let me know when
I
you can
I
see.
quite like Nasdaq as well. I think it's quite nice. The structure is quite nice. Okay,
Yeah.
so let's go through, step one. What do you do? Step two, what do you mark up and why? And then, we'll just build it from there.
Okay. So
And what-
for me, like personally, every like Saturday, Sunday, weekends, I go on a weekly chart and I just like look at it. Like for me, what I discovered, like, and what comes with my strategy is like market's condition and focus on the next candle. What's gonna happen on the next candle on a weekly charts. So like for example, right now we can see like the market is expanding, right?
Mm-hmm.
And for me, like here, I can tell the next candle is gonna be like probably bullish, and I, I'm like, okay, so for the next week, I'm only gonna look for longs. I'm gonna
Okay.
buy and that's it. I'm not gonna short. I'm not gonna sell. I'm gonna wait for a setup. After that,
Okay.
like I'm gonna go on a daily charts and see if there is like
Nice.
some point of interest. Like for
I like this.
example,
You're going down the time frames from weekly. I really like this. This is
yeah, I'm
good.
gonna like break down the whole strategy.
It's like it's basically like time frame correlation is right what they call it. So if
Exactly.
they're all aligned, you're sweet. But if one's this way, one's that way, I guess maybe be careful.
Yeah, so like over here, like I marked the point of interest here on a daily. There is like FEG that I fair value gap that I didn't mark in fully, probably because there is some liquidity on a lower time frame. So I was waiting for this, and when higher time frame hits my power point of interest, I'm gonna go on a lower time frame and wait for the open, right?
You're down to the
So
four, and
yeah,
then from there,
yeah. So like over here, like I what I wanted to say, like before all this, like I always wait for the open. That's it. Like I'm not trading in the mornings, I'm not trading during the Asia, even though sometimes there is like a setup, and I'm thinking if depends on the news and if there is like red folders on the market that day, maybe I'm gonna take like 99% I'm waiting for the market open, which is like 9:30 US time.
okay, you were waiting for a bounce into this area, and then where you've got that big fair value gap there, and you were looking for an entry somewhere around there as soon as it hit, correct?
Recently I started realizing because earlier I was like did a lot of journaling, but only on the charts, only candles. What I'm doing wrong, and I found out that when there is like all rules respected in my strategy, and I enter on a trade, I don't care what's gonna happen there. Like I'm totally calm. When I enter a trade, sometimes I'm like really nervous and stuff like that. So I realize why would I do that to myself when I can like wait and respect like all the rules to come here, and then I'm gonna enter on a chart. And I
Yeah.
found that it's working way better, and I have like way better win rate.
Yeah, this is crazy. Actually, I talked to you about this on the success stories interview. I think this is one of the best interviews I actually did with anyone, and I've done a lot. Where you basically you had a good win rate and you were profitable anyway, but you went and did the due diligence and went back and thought, how can I make myself better? Put the work in again, which is credit to you. How many trades did you backtest?
Oh, I don't know, like I think it's around 10,000, even more.
You realized on these, this is so good, guys, if you're listening into this. And Boban backtested 10,000 trades, and he realized that every single one that he was like not super, super confident on, let's call it like an 8 out of 10. He realized that one of his rules was missing, but he because he was emotional at the time, he wasn't thinking about it. So, but he discovered that and then made himself even more profitable, which is crazy. So credit to you for that, mate. That's really,
Yeah.
really
Yeah.
interesting. What advice would you give for building a strong trading psychology? And what's the best way to scale up as a trader?
Okay, so for me personally, what I realized recently is like I respect all my rules on my back testing, and then when the live chart comes, sometimes it's tricky, and then there is like not respecting one or two rules, and then you got losses. So the game changer for me is like when I realized that in my back testing, I'm making a lot of money, right? And then in the live charts, I'm also gonna make a lot of money because I'm respecting all the rules. I'm gonna respect it on the live chart. That was a game changer for me when I realized that's how I
Brilliant.
say it. Yeah.
So, what advice would you give to a trader who struggles with fear, greed, or hesitation?
Oh, that's a good one.
Hmm.
So I was like that like earlier when I was starting, and just do the back testing. That's what gave me confidence. Like put it in a work. I think I said it in an interview with you. The first time we did it
Yeah.
is like the way I'm seeing it is like if you were watching basketball or football, whatever, like there is like LeBron and then there is like Ronaldo, Messi. Those
Hmm.
guys put it in the work like every day. They practice 2, 3 hours, 5 hours. Like I don't know how many hours they put it, and that's just a training. It's the same thing for me. Like if I'm on a back testing on FX replay, it's the training for me.
Yeah.
Tomorrow when the live charts come, I'm gonna be ready. That's how those guys like are ready. LeBron James take like 5,000, 10,000 shots in a week,
Yeah.
and then he comes at the game and he shoots like 7 out of 10 triple,
Yeah.
and he's like GOAT. So that's how you have to see it and do it. The best way you get out of the fear is like if you're on a demo account that like just try entering more and more trades, you will get out of that fear. That's how just enter more, respect your strategy, enter on a trade, and you'll see it. After like, I don't know, 50
Br-
times, you're probably gonna get out of that fear.
Brilliant. Nice one, Boban. Well, that was absolutely fantastic, guys. Again, Boban, thanks for coming on so much. So,
You're
guys,
welcome,
now
guys.
you've seen how a funded trader approaches the markets. Let's zoom out and have a look at what's actually driving the markets this week with Dan, our community manager.
Take care, Boban. Thank you very much for that. It's really insightful. So, guys, just to give you a quick overview of what we've seen so far this week, a lot of the market attention right now has been focused on US and Iran situation, especially around the Strait of Hormuz. Now, the reason this matters so much is because around 20% of the world's oil supply passes through that area, right? So, if you're probably wondering why has this kind of situation been such a huge catalyst in the market, is simply because of that fact, right? So whenever tensions rises there, oil prices obviously reacted very aggressively in the last few weeks, as you guys have seen with the news, right? So 1 minute markets rally because there's talks of a possible agreement, with that being oil. Then the oil spats again because of military headlines or threats coming from both sides, right? So oil's been extremely volatile because most traders, you can see even institutional traders, right? They try to price in two possibilities. So either tensions calming down and oil supply normalizing, or tension escalating further and global supply getting disrupted again, right? So the bigger picture is actually very simple, where markets right now are being kind of driven by a lot of the certainty, right? So if traders believe that in the US, Iran can move closer to something of some form of agreement, oil would usually drop, right? And stock markets tend to rally, and the risk appetite kind of improves for the overall market, right? But if these tensions do escalate, it means that oil prices rise, as if you guys have seen with crude oil has kind of risen to kind of these all-time high, right? So those can continue to rise if tensions do escalate, right? And then inflation fears can increase from that, right? Because, with oil prices rising, it's quite directly linked to inflation because overall price of everything is rising, right? So and again, remember, high oil prices affects everything: transport, shipping, fuel, business cost, inflation, as I just mentioned. So this is not just an oil story; it affects the entire global economy. So one thing traders should understand from this is that the market is no longer kind of reacting just from economic data; it's reacting heavily to geopolitical headlines, and it's obviously been the case now for several weeks. So what does this actually mean for the Fed, right? We just had interest rate decisions last week, and we know interest rates are kind of the high impact news for the overall markets. And as traders, we always should just watch out for that, right? So the Fed has been kind of trying to bring inflation down to the overall goal of 2%. And because 2% being kind of the overall goal where things really are neutral and things are healthy for the economy, right? So, but with oil prices rising because of geopolitical tension, that can mean that inflation has become harder to control, especially in these times, right? So and when you look at actually last week, there were comments from the Fed being made last Friday, mentioned the situation around the Strait of Hormuz and energy prices, right? So it's something that you have to pay very close attention to because rise in oil prices can feed directly into inflation, right? So even if inflation was slowly cooling before, high energy prices can create another wave of inflation pressure, right? Again, so that's why traders are watching the situation very carefully, right? So if tensions calm down and oil continues to fall, markets may start pricing in more confidence around rate cuts later on, right? But if oil spikes aggressively again within the next few weeks, let's say, has that been a scenario, the Fed may need to stay more cautious about trying to kind of lower interest rates, right? Because as you know, the goal, the 2% goal of having inflation brought down to that percentage becomes a lot more harder. So the need to cut rates may not necessarily be something that they'll be focused on if inflation and prices are way too high, right? So the easiest way to think about all of this is that if there's less tensions, it's better for stocks. It means that oil prices can come lower because right now that's kind of been a safe haven for most investors. And there's obviously more confidence across the markets, right? But if there is more tensions arising in the next few weeks, it means that oil prices will increase, there'll be more fear across the markets and a lot more volatility, right? So that's really the main battle markets are trying to price in right now. And as traders, we kind of don't need to predict politics perfectly, right? We just need to understand what the market cares about, right? As I just mentioned, less tension, better for stocks, more tension as higher oil prices, right? And so with the sentiment kind of shifting week by week, for the next few weeks, we want to watch the headlines around the US-Iran situation and more importantly, how that can affect the next comments made by the Feds and interest rates around that. Because right now, as just discussed, those two things are heavily connected, right? So now let's actually break down on the charts and see what the markets are actually doing with our internal analyst, Liam. So thank you for that, guys.
Nice one, Dan.
Yeah, thank you for that, Dan. So I'm going to run through some charts now, show you some technical analysis and my thoughts on Bitcoin, gold, and oil. I'm going to show you my trade of the week, some technical analysis behind that, and I'll finish off with a setup I'm looking for next week. All right, awesome. So you should be able to see my screen now. We're going to start with Bitcoin.
Yes, all good, mate.
So with Bitcoin at the moment, this week we did hear the fact that there was a memo potentially being created, a one-page memo to end the war. So that actually saw markets sort of spike up, which is what.
Lee, just on that point, I know that obviously the war and the hummus is going to affect the oil prices, but what about crypto? It's a bit of a dark area for me. Could you just talk to a little bit more about that?
Yeah, so it directly correlates. So as Bitcoin is a riskier asset, if markets are risk off with the fact that the war is going to carry on, then markets want to risk off. They want to take the money away from riskier assets so they can sort of move away from the likes of Bitcoin. Whereas if things are getting a bit more better with the war, things are sort of turning around, getting a bit more positive, then we may see capital flow back into riskier assets like Bitcoin.
Got you.
If I show some technical analysis for this, and this is because when markets are typically moving headline driven, they sort of look for other reasons as to where market's going to stop, and that's where technical analysis really starts to highlight itself. So that's why we've seen these trend lines sort of work very well at the moment. But with the fact that the memo hasn't been announced yet, it's just sources familiar with the matter announcing that there may be a memo coming out. We may see that it might not happen, and if that does happen, if it doesn't come out, then we may see Bitcoin sort of move back down lower and sort of test the mid regions of the 70,000 level, which is around where the 38.2% is of this leg upwards. So this is a key level at the moment that we're sort of interested in at the moment. In confluence with that, we've also got the lower level of this equidistant channel. So that's something to look out for at the moment. I can highlight that for you guys with some pencil. So around this level.
Nice.
Will be an interesting point to be looking at. However, if we do see that the memo has come out, we may see Bitcoin make a good leg higher as the risk on environment will be back on. So we may see Bitcoin sort of get a good bit of momentum back into it and sort of challenge itself higher. And then moving on to gold. So exactly the same as Bitcoin. It's moving headline driven at the moment. The scenario is, like what Dan was highlighting, is if the war's carrying on, then interest rates are going to be held higher for longer. And that's sort of the narrative at the moment. It's the higher for longer narrative. So if the war sort of carries on, then the Fed will maybe be forced to be able to keep interest rates higher, which is actually counterproductive for gold, as most people sort of want to move into gold as interest rates are coming down, which is the main reason as to why we've seen gold over the last few years since COVID sort of rise so higher is interest rates are coming down. Everyone really knows that, so everyone sort of wants to get into gold. But as with this war's come out, it sort of had a big impact on the fact that interest rates might not be moving on the same schedule that we thought they were going to be doing. So that's why we see in sort of gold, the exact same as Bitcoin, be very headline driven.
Is that what you're looking for to take this weekly, or?
Yeah, that'll be something I'm looking to take. It could potentially trigger tomorrow. If not, I will reassess this sort of position next week as the candlesticks will move on a bit. As at the moment, it's sort of in line with the trend line on the 38.2. So that's something I'll be sort of looking at for sort of immediately to happen. If it doesn't really happen, I'll move away from this as technical analysis doesn't really move with price action. It's fixed, isn't it? So the memo was really sort of spiraling around the markets by the rumors of a memo being released of a one-page memo for the war ending. So I'm not too sure if you're aware, but Aussie dollar and New Zealand dollar are major pairs for risk on and risk off moves. And as we saw risk off, we saw money moving away from the pounds going into the New Zealand dollar, as it's a bit more of a risk on currency compared to other currencies, which are a bit more safe haven. So as we saw that big move come down, I'm expecting price to maybe come down a bit further, and I'd look to get into the 61.8 so I can draw some risk reward ratios. And this is actually also in confluence with some key levels. If I can draw that for you guys, some key level around here. This is in confluence with the 2.27.
Is this GBP NZD?
Yeah, pound New Zealand dollar. Yeah,
I got you.
So because obviously price hasn't actually come down to this entry, I'll imagine it has done, and that's where my Fibonacci will be drawn around there, and I'll look to take price up to around the 61.8. As that's coming close to the key psychological level, 2.3, I would actually move my stop take profit down to the 2.3. I don't want to get too greedy with it. And that's what I'm looking for next week. I think that's going to be a good position to be looking at.
Super nice.
That's everything from me.
Great. So we had another question come in from Ryan, and he asked if you can trade news events on Traderscale. The answer is yes. News trading is fully allowed during both evaluation and founder staging. The only restriction is traders cannot hedge both directions, the markets during major news events.
Now we've had another one from Michael. What happens if I stop trading for a while on my account? So the answer is Traderscale accounts have a 10-day inactivity rule. If there's no trading activity for 10 consecutive days, the account may be breached due to inactivity.
Right, so we got the last question coming from Caitlin that we've picked, and question was when is our next sale, right? So the answer to that is we're actually happy to announce that tomorrow is our third birthday, so we will launch a sale for that. So look out for that in the community and everywhere online, to get in on that discount.
Okay, guys, so that's a wrap. Thanks for tuning into this week's live webinar. Like I said, these are going to be every 2 weeks. So if you're serious about becoming consistent, jumping on these are the best way to help you get there. Okay. We just had a ton of value with Boban there. He was one of our finest traders. So as promised, Liam, if you want to bring up the discount code, we have a special gift, a 50% discount code, which you can use.
There you go, guys.
And at checkout for 50% off any challenge. And our winners for the free 10K two-step challenges are David Mitchell, Andy Stratton, and Joe Reeves. So if you guys want to please contact the support team at support@traderscale.com, and we will cross-reference with the registered emails for a webinar to add your free account. So thanks again, guys. Perfect stuff. And we'll see you again in 2 weeks with another top trader from Traderscale.